Okay, this is week commencing 5th of May. Analysis. So last week NFP was meant to be easy in terms of looking for this target to be met, but we didn't do that. We actually did this. We went lower. Not only did that engineer equal highs, but if you zoom out enough on a higher time frame, on a lower time frame, it looks like, oh, we were completely wrong. It's going down now, right? Let's sell it. Not quite. I'm still not over the edge unless we close a body below this order block here on the weekly for me to think about this and maybe then this, but for now I see this as a pullback like this. Look at this. At some point price was here, right? And then we were at that time probably looking at, a monthly time frame, probably at this bigger BISI to be filled up. But then people saw this and thought, it must be going down, or we got a huge move done, right? And this is maybe just pullback to still short into, but it wasn't. Okay, so just like that, I'm looking at this as a opportunity to get long on a weekly time frame. Dropping down into a daily, you can see here that this is our dealing range. This is the 50% we're in discount at the moment. So this is our discount PD array, fair value gap. We managed to close a body above the discount PD array, above the premium of the discount PD array. So this is a discount PD array, and this top part is the premium part of the discount PD array. And we closed the body outside of that. That shows you bullishness straight away. Now, zooming into it further, on a 4 and 1 hour, the wick, and on this lower time frame, you can see that huge pullback off of the midpoint of the fair value gap slash the NAWOG. I think this indicates us that we could further sink on Monday. Why do I think that? So that depends actually on a premise. What's the premise? Well, because I think it's still risk off dollar higher to the equal highs in this fair value gap, and these bullish targets, because of my direction bullish still on a hard time frame closing basis. I think that Monday, or more specifically early week, okay, so the first 3 days, Monday, Tuesday, Wednesday, counterparty, if obviously the bullish direction is true for the week, then the counterparty is obviously bearish. The opposite of bullish is bearish. The opposite of buys are sells, longs, shorts, okay, premium discount. So for the counterparty, liquidity pairing purposes, we're gonna rate this low, and maybe look to close this on a lower time frame. But on a daily, I don't want a body closing below this. It's preferred if it doesn't, okay? And this daily order block as well. Depending on time, this might be a good long or short on EU. It depends on time. If price is near any of these and it's a time where movement is also expected and it's exceedingly bearish dollar, and then you see market structure shift, easy long on the dollar and short on the EU. So I'll see this as a counterparty for the week, okay? You have the BISI as well, of course, not to mention here. And of course, mirror image here. Early week, if our premise about lower prices is true on euro, then this is the weekly target, obviously. The previous weekly low can be TP1 for the swing trade. And counterparty again rests here above this previous daily high. You have a breaker here. Large CB, daily fair value gap here as well. So counterparty is here and direction is low. Let's just have a quick glance at news. Actually, it's not that much when I looked at it last time. Like, there's no big major news that we look for normally. So Monday, relatively calm, just medium impact. Barkin speech in the evening, and again, that's not really that disruptive, to be honest, last time. We can prove that from the notes. And if you go on Tuesday, again, nothing much. Yeah. It's just really calm, basically, as well on Tuesday. And then if I just scroll down, Okay, sorry. So if he okay, I'm not sure why I wasn't working before. Anyways, I was just testing you, but so yeah, nothing on Tuesday that would significantly change the market direction. You know, this is not that much to be honest. And then just scroll down. Wednesday, again, medium impact, nothing much. Friday, sorry, Thursday, you have some red news here, something to watch out for. Probably something that will allow distribution. And then obviously Friday, you've got this. Um, 2 p.m., 3 p.m. So you have these, so that's good. But yeah, that's pretty much it. All I would say is my advice from last week. Look, you don't have to be right at all to make profit. Okay, to be profitable, you do not need to be right. Actually, most of my trades were actually right last week, I think, but we were not profitable still. Okay, it's more about how you can wait, how much you can wait. You can be patient for the correct conditions, because um, you know damn well, basically, with your kind of experience, that if it's not there, like, I'm not saying it's a black and white. Okay, a lot of the time it's gonna be that gray area because of your experience. You're gonna see gray area where, obviously, with most experience, hopefully, you're then gonna see that as a no-go area. Okay, that it's no trade. But at the moment, yeah, I get it. Okay, experience may not be that much. You might see, oh, you know, I might be able to get away with this scalp, but actually, it ends up being a not um pertinent condition for that move that you're looking for. Okay, for example, that short that we were looking on Tuesday, it never actually went down. It kept meandering around. So having in the mindset before even you enter that, look, this is the drawn liquidity. Okay, this is why I think it should go lower now, and should it not do that, this is what I'm going to do next. Okay, so just logically, just think that through for a sec. Okay, if it doesn't go down before the silver bullet, and it's shown every other sign that it will go lower, then of course the logical thing to expect is it's going to go lower with next time. So again, another thing I want you to do this week as well is, if it's in a deep discount or a premium, okay, let's just say, argument's sake, it's in deep discount and I'm expecting a bullish move, okay, but it doesn't deliver. In the silver bullet, it doesn't deliver. New York doesn't deliver, okay. What would you logically expect? Two things: overnight, or what's the next best thing? Next time. What's the next time? Well, the most probable next time is London. Why London? Because it's the session where the biggest moves happen. Usually, if you don't have that move that you're expecting, it's really, I don't want to use the word overbought, oversold, but it's an analogy I'm trying to explain here. So if you're trying to go long and it's a deep, deep discount, and it's going to reverse and it does not reverse, next time is your best bet. You like the probability of that move happening in London. Like if it was like 70%, bro, like it's going to go up to like 95%. Like it's going to be extremely, really high probability trade. So something like that, I would even wake up early for London to trade that. Should I see the signs in the market, then I will take that long easily with my eyes closed. You know, because the probability just goes through the roof. So it's about understanding that. Back in the day, it was just like, oh, okay, I'm just gonna wake up in London and just see what I can see in the market, and I'll just engage it. And there you go, there it is, right? Now it's not that. It's about probability. If you see a high probability, boom, I'm going in for it. I'm going in for the kill. How you learn that and how you get there is by studying, back testing continuously. Keep doing it. Keep doing it every day in, day out, day in, day out, day in, day out. Spend time on the chart, study, backtest, research. And these patterns of price, how it moves, how it delivers from premium to discount. The subconscious is gonna pick up on that, and then once it picks up on that, it'll just become even more easier to trust certain trades, certain setups. And I think that's literally how you become a consistently profitable trader. You just filter out the shit basically and the good trades, and then first you learn to filter them out, and then you learn to only stick with them. Because there's a key difference. You may learn that certain conditions are high probability. That doesn't necessarily indicate that you're then gonna stick with the high probability conditions, because maybe a lot of the time you won't. Especially in early days when it's gonna be even harder to control um the gambler inside of you. So that's not important. Just learn the high probability for now. Once you're good at it, once you're proficient at it, you've had practice over time. How much time? That depends on how much hard work you put in. But over time, you will learn to trust yourself and avoid the crappy conditions. Just stick to the high probability ones, and that's when your equity is just gonna absolutely fly through the roof. So yeah, that's my advice.